Rick Sharga joins us, EVP at auction.com, and I'm so glad Rick is here because I've been getting text messages and emails and tweets from people saying, what does this mean for housing? There was a sell-off in the markets, big dramatic, one of the more dramatic sell-offs in terms of just sort of the change from lack of volatility to massive volatility in a couple days in a row. What does it mean for housing? What does it mean for people closing on houses? Rick joins us right now. Rick, do we see a reaction? I was responding to some of these texts and emails yesterday saying, well, it doesn't help.
I think it's almost too early to put your finger on specific movement in the housing market. But in the near term, it will probably be a boon for housing in two ways. One, I think when you have this kind of two reasons. One, I think when you have this kind of volatility, people start to look for less volatile but still attractive investment opportunities. Excuse me. And U.S. real estate, not just domestically but internationally, is viewed as one of those opportunities. The other is it's very unlikely that we're going to see a rate increase from the Fed, given what's going on both in the U.S. stock market and in the Chinese economy anytime soon, and that will keep affordability within the reach of a lot of prospective home buyers.
Rick, to your first point, we've seen prices kind of rebound a bit. So which parts of the country are offering the most opportunity? Now we've seen kind of this bettering in prices here.
Well, we saw California actually slow down last month, and that's probably a good thing because the price.
Well, the rate of increase slowed down. The prices are up still year over year.
Prices are going up in California. They continue to go up. The actual sales activity is what slowed in California. I think we've hit an affordability wall in certain California markets. We're seeing a lot of activity moving into less expensive markets. Southeast, some of the markets in the Midwest. Detroit, oddly enough, has been very, very hot. Excuse me, in some mid-Atlantic markets, although New York and New Jersey still lag the rest of the country in terms of their recovery from the bust. So you are seeing a lot of movement toward the middle and the lower southeastern part of the United States.
So I have to ask the millennial question, as I'm our resident millennial today. Why?
That's her calling me old. That just happened.
Very, very nicely. Just more experience. So why are us less experienced millennials renting for longer? How is that affecting the market? And do those tides start turning at any point as this generation does kind of get older?
Yeah, well, most of your millennial peers did not land a cushy job at Bloomberg. So when a lot of them are staying at college longer, a lot of them are getting their first real job longer because when the first wave of millennials graduated, they were in the midst of the recession, and there really weren't a lot of good jobs available. So that first real job is coming later. Marriage is coming later. Kids are coming later. A lot of the inflection points that would lead to that movement from renter to homeowner are simply happening later. But all of the research that I've seen that talks about long-term objectives for the millennial generation suggests that at some point they might actually have a higher home ownership rate than previous generations. It's just taking a little longer.
And why is that?
It's partly as simple as the economy being bad when the millennials first started to get into their jobs and into home ownership ages. But if you look at things historically, as millennials are going from, say, 25 to 30 years old, the home ownership rates aren't that far off from what we saw in previous generations. So the expectation really is that as your age cohort gets a little older and starts going through some of those other life events, that the home ownership rate will follow.
Interesting. Yes, that home ownership formation is such an important number. For deals that are out there, for people selling right now, for people buying right now, I mean, I have people, it's just kind of amazing how this volatility just brings people out of the woodwork. But, I got the text I read on the air yesterday from a friend who was about to close on an apartment on Monday, absolutely flipping out. Absolutely. My life is getting ruined. My finances are being obliterated. I don't know what to do. Should I still buy this apartment? And I don't think that that's a unique reaction.
It's not. And look, people, a friend of mine who's an economist refers to the U.S. stock market as the 13-year-old daughter of the financial market family. The emotional diva of the group. So when we have these swings, people react emotionally. Well, I have one of those at home, so I really understand the analogy. But people do react very emotionally. Listen, I've lived through 2 market busts. I've seen my 401k turn into a 201k twice.
Right.
So people need to kind of keep their heads about them and their wits about them and look more for the long-term opportunity and not react so much to what's happening today.
All right. Rick Sharga joined us on the T-Mobile phone line.